Hi guys, welcome back to my channel. In today's video, we're going to go through how to implement trading into your full-time 9-to-5 job. Whether you have a 9-to-5 or you're a full-time student or a full-time parent, whatever the case may be, implementing trading into that lifestyle can be a little bit difficult if you don't know where to begin. I'm going to go through some of the struggles I faced, some advice I can give you guys, and some tips and tricks to start implementing trading into your routine. Also, before we begin, don't forget to hit the like button down below and subscribe to my channel. Also, don't forget to turn on those post notifications so you can be notified as soon as I put up a new video. So the first thing you need to do is figure out what your weekly schedule looks like. When I first started getting into trading with my 9-to-5 job, I would look at my schedule every Sunday night and figure out what days and what times I had the most meetings, had the most work due. That way, once I figured that out, I knew exactly how much time and what days I could potentially block out just for trading. Once you've figured out the time, once you've blocked out time for trading, you then want to assess what the most optimal trading hours could potentially be for you. For example, the highest volume hours tend to be the first 2 hours of the market and the last 2 hours of the market. Block out your day according to when the most optimal time for you to trade could potentially be. You don't want to trade in the middle of the day during lunch hour when trading volume is extremely low and there's not a lot of potential moves for you to take. That's just going to stall your trading in the long run. Me personally, I would always take my lunch break in the last 2 hours of the market open. So I would take my lunch break really late just so I could trade during those optimal hours, those high volume hours. The next thing you want to do is make sure that all of your weekly and daily research is done ahead of time. Again, how I would go about it is every Sunday night when I'm working out my weekly schedule, I'd also make sure that afterwards I go ahead and research whatever events, economic events are upcoming in the week. For example, if there's any day that there's a holiday, or if there's any day where the Fed could potentially be speaking, or if there's any upcoming earnings on specific days, events that are upcoming for specific companies, you want to make sure that you assess all of that so that you know exactly what days could potentially be the most optimal days for you to trade. This helps me extremely in scheduling my week because any day that there would be, for example, a Fed day or there would be a holiday, I wouldn't trade the day before, the day of, especially with a Fed meeting. Volume tends to be very low. There's a lot of volatility in the market, so I wouldn't even waste my time on that day. I'd focus on the work that I had to do for my 9-to-5 job and then just skip trading for the day. This can be really helpful in the long run because those days where you know you don't want to trade because of a Fed meeting or whatever the case may be, economic news, whatever news that you see potential on that day, you can focus all of your attention on your 9-to-5 work or your school work on that day and try to pretty much squeeze your weekly tasks into that one day. That's what I would do. I mean, it really depends on everyone's job and how your job allows you to work. Also, if you guys hear some background noise, it's because they're working in our basement, and I'm really, really sorry about that. There's really nothing I can do. Like I said, I would do my research Sunday night as well as my scheduling. And then every morning of whenever days I wanted to trade, I would also research probably an hour before the market opens. So I did have to get up a little bit earlier and get to work a little earlier just so I could answer all my emails, anything that I had to do early in the morning. And then I would give myself the hour before market opens just to research any change of news, anything that has come out that morning, any specific stock related news, whatever the case may be, you want to make sure that you have the most up-to-date news. That's why I always recommend waiting until about an hour before the market opens before you start assessing all of that news. Once you've compiled all of your news, you need a daily watch list. Now, what I recommend when it comes to your daily watch list, you want to keep it small. 9 out of 10 times, you're already going to be distracted with whatever work your full-time commitment is giving you. So you want to make trading less complicated. That being said, I don't recommend having a watch list of more than 3 stocks maximum, especially if you're a newer trader. So more than likely when you're working a 9-to-5 job, you're not going to be at your trading setup or whatever setup that you potentially have to trade. So it's already going to have an enhanced level of difficulty. So you don't want to make it even more difficult and complicated by trying to watch every single stock and trying to catch every single move throughout the day. The reason I did my research the morning of is because I wanted to be extremely selective on the stocks that I picked for the day. Because I wasn't able to catch every single stock or watch every single stock move, I had to be extremely selective. That's when I started my morning routine, and I would always make sure that I had a catalyst behind any stock that I watch. A catalyst is going to help your stock move throughout the day, and it's going to give you more potential in that stock throughout the day. That being said, when you do your morning research, you want to look for stocks that have price target increases or decreases, upgrades or downgrades, any company sentiment news, any earnings news, whatever news that could potentially move the stock throughout the day. I always want to make sure that it has a catalyst. That way you're more selective with whatever watch list that you pick throughout the day. Because you want to keep your watch list small, you do have to be more selective. So make sure that the stock that you pick or the stocks that you pick to watch do have those catalysts behind them so that they could potentially help them move throughout the day. Another thing that really helped me when I was trading with a 9-to-5 job is setting alerts. Now, whatever daily watch list that you pick, whatever stocks you want to watch for the day, you want to make sure that those stocks are already charted. The reason I recommend picking stocks that you've already charted before is because that's one less thing that you have to do throughout the day. You already know what your critical levels of support and resistance are. What you could potentially do is set an alert a few cents below or above that critical level so that when the stock hits that alert or your alert goes off, you know to watch it. I also like setting alerts on intraday levels. So if I saw a stock was consolidating or it was, in an area of choppiness, that can really help you gauge some good intraday levels of support and resistance. So I would sometimes let my stocks run throughout the first half of the day, go back and see what critical levels it's set, especially if it was in a consolidation period, and then use those support and resistance levels, those intraday support and resistance levels, to play the stock later in the day. Usually during power hour, the last hour of the day, the stock could potentially break those levels. So then I would set alerts, like I said, a few cents below or above the level. You don't want to set it right at the level because then you're going to miss the breakout, you're going to miss the move. So you want to set it a couple cents below or above the level, depending on how the stock moves. If it's a stock like Amazon and it moves in bigger increments, obviously you want to set it about a couple dollars below instead of just a couple cents. Now, alerts can be pretty tricky. You don't want to just blindly jump into a trade once your alert goes off. I see a lot of people doing this, and you could potentially take losses if you do that. How you want to utilize alerts is it's kind of a system for you, especially when you're in a 9-to-5 or you're not fully focused on your trading, whatever else you may have going on. It kind of triggers you to pay attention to a potential move that could happen. Which means that it's not guaranteed. When your alert goes off, you still need to follow your trading plan. You need to watch any other technical indicators you look at, the stock price action, the volume on the stock, whatever the case may be, whatever your strategy entails, you want to make sure that you're still implementing that when you're using alerts. Don't just blindly jump into a trade because your alert has gone off. Make sure that you analyze the stock, what it's doing, and make sure that it's a clear breakout of any level that you're watching prior to you just jumping into that trade because of your alert. Another thing you could potentially do when you're setting alerts is, for example, if I wanted to set an alert for Tesla breaking the level of 440 on the upside. So then I would write down on my notepad, Tesla break of 440, where I would enter if the stock broke that level, and then where my target is, where I would exit if the stock breaks that level and I were to get into that trade. You want to write down your trading plan, especially when you have a 9-to-5 job, because sometimes it can get a little bit distracting. 9 out of 10 times, like I said, you're not fully into the trading, so you want to make sure that you don't get too distracted. So write down your trading plan prior to taking the trade. Like I said, when I would set an alert, I would write down a trading plan with it just so I knew exactly where I would enter and exit on that trade. I also recommend looking into swing trading and day trading. You don't have to consistently watch a stock all day. If you're in a day trade, you set a specific stop loss and you set your target. Once your alerts go off, you know when to exit that trade. Same thing with a swing trade. You're not even watching a swing trade on a day. You look at you enter a swing trade, and obviously you're looking to hold it for 1 day, 2 days, 3 weeks, whatever the case may be. So you don't have to consistently watch it as much as you do if you were to scalp a trade. So some last minute pieces of advice that I'd like to give you guys is, one, don't quit your full-time job just to get into trading. Don't do it right off of the bat. Being financially stable is a key component of becoming a successful trader. You need to make sure that you are financially able to fund your trading account. You need to be okay with taking losses. Therefore, you need to have another income coming in for you to be emotionally okay with losing whatever money you've put into your account. Your emotions are going to be heightened if you're not financially stable and you're trading. Trust me, it's a lot harder to trade without another source of income, another stable source of income, than it is if you were to have that source of income. The moment I thought it was appropriate to leave my job is when I had more than my yearly income, my yearly salary saved up. And also I had that in my trading account as well. I was consistently successfully trading for about 6 months, had saved up that money. I knew that I could financially support myself with my trading income as well as the money that I had saved. If I did end up not being a great trader after that, I still had money to bounce back off of and find another job. So don't just quit your job off the bat. Make sure that you're consistently bringing in income from your trading account, and you do have some income to fall back on prior to just leaving your 9-to-5 job. Also, guys, I just want to let you know that it's not an easy task. It is hard to trade with a 9-to-5 job or a full-time commitment. I know because I've gone through it, but if you just push through and you really give it the time and effort, I promise you every single one of you is going to be successful. All right, guys, that's all I have for you today. Thank you so much for tuning in. If you have any questions, go ahead and comment down below. If you want to see more videos like this, go ahead and hit the like button and subscribe to my channel. And I'll see you guys in next week's video. Bye.